Hello everyone, welcome to the Ichimoku charts.com hourly analysis for the Aussie dollar US dollar FX for Wednesday, August 21st, 2013, leading into August 22nd. A market that is trending down, a very substantial downtrend in this market now. Previously last week we saw some solid announcements and we had a very substantial uptrend, and now a very well defined downtrend in this market in the second time frame. This current candle, the black body candle, the final candle there hasn't finished developing yet, but we have a lower high and a lower low on that candle. So technically a downtrend in the first time frame and a downtrend in the second time frame, where we have a series of lower peaks and lower troughs. The current candle that has finished trading has a very large black body, therefore the sellers have made a substantial amount of net bearish progress on the hour between the open and the close, suggesting that there is some solid downside momentum. But we have a fairly large shadow on the bottom of this candle, highlighting the price rejection from below the first pivot point support level, and that is quite significant. So there is potential for buyers to come back into this market because of that rejection, and we should watch this level, which is at roughly about 89.40, 89.37 very closely. If we do see a solid bearish attack on that level, we could quickly see the market testing down to the second pivot point support level around the 89 level, or just below the 89 level. So some important price rejection from that area. Now, in terms of the Fibonacci extension, or examining the relationship of this current first time frame downtrend that the market's into the previous time the market was trending down, and here we've seen the market rejected from the 61.8% level. Very strong rejection, testing exactly to that level and being rejected from there, suggesting that there is potential for the market to trade higher and potentially change the trend in the first time frame. The area between the 50% and the 61.8% coincides with the area around that first pivot point support level as well. Now, if this trend does continue down, interestingly, the 100% level is exactly at the second pivot point support level, so we should see very, very solid support coming in there, and that's around the 89 level or just below. In terms of the Fibonacci retracement of the prior first time frame uptrend, and here we've seen the market testing exactly to the 261.8% level at 89.30, being rejected from there, so suggesting potential for a change of trend. And now, as we're looking at this current candle developing, we are seeing buyers come in, so that's quite significant. And this area obviously coincides with the area roughly around that the first pivot point support level, or just beyond there. If we look at the 423.6% level, the next level down, coinciding with the second pivot point support level, and in line with what we've seen with the other Fibonacci techniques, suggesting that if this market does continue to sell off, we should see very, very strong support down around there. Now, in terms of patterns, and we did have some small congestion here recently over the previous couple of hours, and some sort of a wedge that moved against the trend, a little pennant type pattern, not really a pennant, but more of a very small wedge that formed quickly. We had the solid bearish close down below the bottom barrier of the pattern, confirming the pattern, and the market we're seeing some follow through after the breakout down below that small pattern. So a small wedge that moved against the prior trend. They tend to be continuation patterns, and that's exactly what we're seeing. The target is the extent of the trend moving into the pattern projected down, so that gives us a target down below this first pivot point support level, roughly between the two levels, so suggesting potential for the market to meet that target. But certainly with the barrier of the first pivot point support level, it's highly doubtful whether we may reach that target all in one go. If the market does rally from here, we have potentially strong support around the round number 90 cent level, and we did see a solid bearish breakout down below there. We can see here that the market found solid support there, retraced back up to around the Kijun Sen and Tenkan Sen, and then sold off once again. And this highlights very well how the Ichimoku indicators can act as areas of support or resistance. Now, in terms of Ichimoku, obviously a bearish market in all three time frames. The market's trending below the cloud, below the Kijun Sen and the Tenkan Sen, and the Chikou span is below the corresponding price action, so confirming this negativity that we're seeing in the market. So the likely scenario here is that if we do see a bounce, we have very strong potential for support up around the 90 cent level. It coincides roughly with the area that the middle pivot point level is trading at. We would be likely to see selling coming in and test perhaps once again back down to the first pivot point support level. We would need to watch that. If we see a bearish breakout down below there, the market could trade down to the second pivot point support level, but we should see very, very solid support around there if the market does trade there, and that area should definitely hold this market. To the upside, as I've mentioned, if we trade higher above that 90-cent level, that we have a strong barrier around the first pivot point resistance level, just above the 90.4 level, and then as we move further into the trading day, the cloud will interact with the first pivot point support resistance level and should hold as very, very solid resistance for this market if we do trade above there, but it doesn't seem likely that the market will trade that high. I suggest that the 90-cent level and around there will be a very strong barrier for this market.